I have a lot of topics to cover, but hopefully there's something you can take away for yourself. Primarily for professionals in business, those that have their own company, know somebody that has their own company, are in management of a company. I think you're going to take away some good tips, tricks, some hints, and maybe just some additional insight. So I'm going to start sharing my screen in just a second. All right, share screen. All right, guys. Fantastic. So, staying afloat during an economic disaster, financial projections in the time of coronavirus. So, again, my name is Jessica Crannell-Menard. I am from Now CFO. I have been with Now CFO for a little over 7 years. I helped start the Portland office long time ago. And then about 3 years ago, I started the Central Oregon Bend office for Now CFO. So, we cover all of Oregon. And even into Southwest Washington, we have clients as far as Yakima, down to Roseburg, clearly also in Portland Metro, and in the on the coast as well too. So kind of wanted to talk about how COVID and coronavirus is really impacting businesses right now, as I'm sure you all are feeling it in some way, whether you are working from home or you've changed your deliverables or changed your product or services to be able to fit in this new economy. But before that, just want to say thank you all for getting on a Zoom. I know it's a little different than probably some of us are used to. So hopefully you are all out of the sweatshirts and sweatpants mode. I'm really glad you guys are all here and able to take a humor break with me. So I'm really happy to present this to you. So let's go right here. So we have some problems with our current situation, as you all know. I won't be too much of a dead horse, but we have to be able to step back and take a look at what's really happening in our economy and in the medical space, especially for healthcare professionals. So, and I'm sure this will all come together, but right now what we're facing looking forward with coronavirus is we're expecting a bit of a summer slowdown as far as what the disease and the virus is really doing to folks out there. Epidemiologists are also predicting a fall resurgence, something that's kind of on the horizon. And then number 3, as you guys can probably all know yourselves and are feeling, there's quite a bit of economic strain. If you've either been fortunate or unfortunate to be looking at all the news, there's a big push-pull between continuing the work from home orders and getting our economy back up and running and opening up businesses so that they can continue to survive, essentially. So the golden question for everybody is when these closures will they end? When will closures end? And really, we don't know. You know, we could be 3 months out, we could be 2 months out, we could stay in the work from home or stay at home order throughout the fall. And so this is a really good time. I've always felt that with crisis comes opportunity. So kind of pivoting from here, we have a couple federal updates here about what's going on. And so here's a little bit of our opportunity that we have and some silver linings in this. So the SBA has been really a great help so far. We have 2 programs as just to go back over what's currently out there for everyone. You have the EIDL, and then you have the Paycheck Protection Plan. Now, hopefully, all of you have been able to put together those applications through your bank or online. PPPs can be done through your bank. The EIDL can be done online through the SBA. I hope you have all been able to put together those applications and gotten those in. I know it's been a bit of a struggle. Some banks have been really busy, and I hope you all have had just some patience for that. But there are opportunities as well for tax breaks. So be working very closely with your CPA, the one that does your tax return. Be communicating with them really closely about tax strategy. All of this is still kind of playing out right now. So your CPAs and the CPA friends that I have, they're all working diligently to stay on top of what's happening. We're still a bit chaotic point right now where we're figuring out the virus itself from a healthcare standpoint. We're trying to figure out the economy and what that's doing to businesses. And then everyone in the government, for example, is looking forward to see how we can recover from this. So stimulus checks, those have gone out or start to go out. It's been a very slow trickle. Looks like August is when they will be hopefully fully distributed. As an update, the SBA on Thursday morning last week closed all of their application process for new applications for the EIDL and the PPP because shockingly they ran out of money, which is kind of a good thing because that means everybody is trying to take advantage of this really great opportunity that crisis has birthed for us. So I know it's a little stressful for some folks, but rest assured, they're working on another stimulus package to the tune of about $300 billion with a B. So it's coming. I'm trying to stay up to date on that. Another quick update or just review on the PPP and the EIDL. Here's a really good snapshot. You guys are welcome to screenshot this. It's kind of a good breakdown of the two different programs that are available. Now, keep in mind, these are just programs through the SBA. There are other programs available from individual cities or municipalities or districts. So for example, the city of Tigard, Prosper Portland. If you guys missed the boat or are just unable to take advantage of the PPP or the EIDL, I would stay very much on top of your local cities, governments, municipalities, districts to see what's on their page for business relief. So with that, oh my gosh, how does this all tie in? So that's obviously the current state of affairs right now. And you know, there's a lot of instability, there's a little bit of chaos in there. We don't know what to go. We're standing on a lot of quicksand. And so we need to be able to kind of find our zen, center ourselves, and a good business owner and a good business strategist will always have their binoculars on so that they can look forward. So when we talk about accounting, you know, no one really wants to think of accounting as being super sexy. Okay, the sexiest stuff that you guys do are all of you being able to create your widgets. You're creating, you know, you're creating good technologies out there, software. You are in the healthcare field. Maybe you have a hair salon, whatever it is. You guys are doing great things, and you didn't go into business to be an accountant. You went into business to make your stuff and to perform your service. But here's where accounting really kicks in and being able to provide that financial visibility. And in this, we're kind of talking about dynamic forecasts here. So what the heck? What in the world is a cash flow forecast? So a cash flow forecast, really in the meat of it, is taking all of your expenditures, all your outflows, and balancing those with all your inflows. That's about as simplified as you can get it. So we have a couple different types of cash flow forecasts. And cash flow forecasts, once again, we're looking forward. We're trying to plan ahead. And so for the short term, when we do a cash flow forecast, we are looking ahead for approximately about 1 month. That would be a good short-term view in an accountant's perspective. There are some folks that play this week by week. My feeling and the feeling of my team is that's still even a little short-sighted. An even longer one is a midterm, or a medium term, and I would say that that's about a quarter. And we call that a 12-week rolling cash flow forecast. So you're looking 1 quarter out, either calendar quarter, you could do it that way, or rolling 12-week. And then you can go into a long-term cash flow forecast, which is either longer than a quarter, it can be upwards of a year, but that's when you start blurring the terminology of a cash flow forecast and your company's annual budget. So essentially a budget is a really long-term cash flow forecast. And as you can probably obviously guess, the longer out that you forecast and predict and project your inflows, all of your revenues in versus all of your outflows, the more hope and a prayer you're going to have to run with it because it's going to be a little bit less accurate. It relies more on formulas and estimates and historical trends. Generally, what you want to walk away with is a minimum of 1 month cash flow forecast or 4-week forecast. So once again, the medium-term forecast, which I really like, gives us more than a quarter, or excuse me, more than a month up towards of a quarter. So you're deriving some of the following information from there. So the cash paid for the cost of goods sold items. You're going to have to find out some of these data points in order to put together your cash flow forecast. Normally a cash flow forecast is put in and created in Excel. There are some software programs that have cash flow forecast modules in them, especially some of the bigger ones. And those will have these data points already in there for you. So the cash paid for payroll, and then your cash receipts from all of your customers. For those that are visual, here is a cash flow cycle. It is not necessarily the forecast, but the forecast follows the cash flow cycle. So this is more for a distributor that they are getting in inventory. So they are ordering their goods, they receive it, they pay an invoice. There is a time delay before they sell their goods, deliver them. They send an invoice, and then there's a collection period. There is a little bit of math down here that you guys can go in. It's based on your average inventory turnover, which I think is a great data point to have, especially if you're in manufacturing and you have goods, tangible goods that are sitting on your shelf. So a lot of times we ask the question, well, how much is your inventory really costing you? That's a very large question, very cerebral question. And then you have to find out these data points as how long does it take for you to sell those items? And then you can do it based on the average collection period as well too. But this is just a good example, although a very long example of what the cash flow cycle can be for a type of company. And I encourage all of you to be able to dig into your data to find these data points. So just to clarify some terminology here, a cash flow forecast does not equal a cash flow statement. If you are kind of on the periphery of the accounting world and you kind of hear a lot of this jargon coming back and forth, just understand that a cash flow forecast or a cash flow projection looks forward. That's what we're talking about, the visibility and putting on the binoculars and trying to see into that magic 8-ball. Whereas a cash flow statement is just that, is a statement of cash flows. And that's usually mentioned in a historical manner. So make sure when a bank, for example, or an investor, private equity, anybody is asking for a forecast versus a statement, just know that they are two different things. One is historical and one is looking forward. So why in the heck, why do we have these? Why are they important? You know, you're probably thinking, oh man, that's a lot of data points that I have to enter. I have to go find all this data and dig into my software to find all that. So cash flow forecasts are the binoculars, and they provide a very good window to the machine that you're driving. So if you run out of cash and you can't obtain new financing, you'll become insolvent. So cash flow forecasts and doing these, creating them and going through the exercise of putting them together leaves a management with there would be no reason and no excuse that you could not see a cash crunch or a cash crisis if you had done all this. So if you'd done all this before. So why are these important? They make sure that the business can afford to pay all your suppliers and employees. Don't run out of cash. Make sure that you can make payroll. It can also be a tool to help you spot problems with some customer payments. I know of a few clients of mine that have notoriously slow paying customers that, you know, time and time again, these slow payers will drag out, you know, net 15, net 30, net 45, and suddenly you're looking at, you know, over 90 days, which can be really detrimental to you as a business. I once had a client, about 15 million in revenue, very heavy industrial producer, and their banker told me ahead of time that, hey, these guys are really hurting on cash flow and they're having trouble paying their bills. Well, long story short, we came in to take a look and we found out that their accounts receivable, their AR, and their customers, that was over 212 days old. So they hadn't been collecting on all of these massive invoices for over 200 days. Yes, no wonder you don't have any extra cash in your bank. The third point is it's an important discipline of financial planning. So I have a really good banking contact over here in downtown Portland, and you know, his bank doesn't necessarily make him or make his clients do this, but teaches and tells all of his clients that he has to always put together a rolling 4-week forecast, and that's due every week to the bank. And it's not because the bank necessarily requires it, but he's forcing the business owner and the borrower to take practice putting together a cash flow statement so that the borrower can take ownership of the data that they're managing. Okay, the accounting is the language of your business, and you need to be able to tell your story, especially with external stakeholders that require a regular forecast. I'm sure for those that are in the startup industry and you're communicating with investors, or you want to go out for investment, or you want to fundraise, you know, your investors, other than banks, well, as well as banks, but all of the investors in that broad category, they're going to want to see, okay, where are you going? Okay, it's great where you've been, but where are you going? Just another key metrics here, or key points of why cash flow forecasts are important. And so a lot of times it's whether you can see the performance of the business. And so when you look forward, you can starting to see trends before they become a crisis. If you say, hey, these customers aren't paying quick enough, well, then we need to really make sure that we stay on top of them. And then lastly, in just a broad general term, to be able to analyze whether the business is achieving the financial objectives that are set out in the plan. So here I have a couple of slides that are just really dedicated to cash flow forecasts. I found about 5 or 6 of them that I liked. I had to cut a couple up so that it would fit on these screens. But some of you are asking, okay, well, what dates do they cover? What does it actually look like? What's the ingredients of a cash flow forecast? And so I'm going to go through a couple examples. These are more for you to take a look at. You're welcome to screenshot some of this. But in general, the points are going to be the same, what it's made up as. So on top, you have all of the cash that's coming in, all of your inflows that you can expect for a certain time period. And then this cash flow is broken out really nicely. You can see the dates from June 1 to middle of July. So it's a nice rolling 6-week out there. And then it has underneath that all of your operating expenses, all of your outflows that you expect at certain times. This particular generic company wanted to have a $20,000 buffer, so a $20,000 safety net. So they calculated that into their cash flow statement as well. So here's another one, just detailing out month by month. So the last one was a week by week, and this one is a month by month. It's up to you which one you find is more valuable. A lot of times they follow, whether you choose to do a week by week cash flow or a month by month is really dependent on your cash flow cycle and your sales cycle. For example, if you are making several hundred transactions in sales per month, you might want to break that into a weekly cash flow. If you're only making a few, maybe under 50, for example, within a month's time period, then maybe you should stretch this out to a month. But again, what's on the left-hand side is really going to be very similar. You have all your cash paid out. You can see some examples in here, your rent or your lease, your vehicles, and then it brings out here your capital purchases. Down here are other startup costs. So I'm going to go into that a little bit more for our startups in the next couple slides. And if you can look all the way down at the bottom, I tried to fit this all in here. Your sales volume, your accounts receivable balance, any bad debt that you might have that you'd have to write off, the value of inventory on hand, and your accounts payable balance too. Another one here, very similar, but different ways on how they're structuring this together. Keep in mind that these were all produced in Excel. I did not take these from specific programs like QuickBooks or Sage or anything like that. I did this in Excel because most folks in the accounting world will do their cash flow or a budget in Excel and then upload it into their software system. So here's another one, a little bit more simplified. Again, you have all your assets on top, all of your inflows, and then you have your liabilities and your equity on the bottom, which is your outflows. And here it takes account your total stockholders' equity, and then just some other data down here, like your days payable, your inventory turnover, which is some good data points. Again, this is the same Excel spreadsheet. I had to break it up into a couple parts. This one is almost a full pro forma, which has your cash flow forecast, your income statement, and a couple other pieces of information in here. But I liked this one and I wanted to show it to you as an example because they are comparing historical data and using that as a basis for their forecast, which is very, very smart. And really the best practice that you should take is, hey, generally, this is what we're doing every single year. And so I can see, for example, maybe we're growing 35% every single year. Well, if we grow about 35% every single year, well, then I can forecast out about what we're going to do. This is probably a bad example because it goes into 07, 08, and 09. So I don't know if they had growth in this one. But anyway, so just another good example of how they're using previous data to help model and massage some of the numbers that they expect to come in. And this last one here, I added this one on the fly this morning. This was another very large example of a cash flow forecast. And they had a couple different tabs at the bottom of their Excel spreadsheet. And this was one of the tabs. And I liked this. I just screenshotted it because I didn't want to type it all out. But it just gave a good explanation of what these terms are for those of you that are newer to putting together this data. Some of you don't know exactly what they mean, which is totally fine. Don't feel embarrassed. But cash on hand, a lot of this stuff is pretty explanatory, but it's good just to know exactly what they mean so that you're putting things in the right categories here. So I'll let you guys read this. It continues on. So this slide here is the top. This is your assets. This is the cash flows in. And then we go down to the middle part of your cash flow forecast, which is your cash paid out. So again, what you'd see are very similar categories here with your rent. You have payroll that you're expecting, repairs, interest, insurance, some outside services, any subcontractors that you might have, taxes. The good thing about this one is if you guys don't already know about the CAT tax, the CAT tax, the corporate activities tax, that is a very Oregon-based tax. It's new this year. You have to predict what your tax payments are. So that would be a very good data point for you to include in this category here. Again, I would suggest connecting with your tax CPA to discuss that so that you have an accurate cash flow forecast. Again, you have down here these other startup costs, which is expenses that you have tracked and kept together so that you can put that into your forecast here. Why is that in a forecast? You might say, well, these numbers have to, if we're trying to tie out each month or each quarter, you still rely a little bit on some historical data too. And lastly, part of this spreadsheet, you have your cash position. So once again, your end of the month, you have your essential operating data. It goes into your sales volume in dollars. It figures in your depreciation and then what you have at the end of the month. So your cash position right here is really talking about, okay, what should be in the bank? What should we have available at the end of this month? And this spreadsheet was based on month by month. So hopefully that's a little bit helpful to you guys. I just really love that it explained it regardless of how self-explanatory some of these headers were. Thought this was very valuable. Some of the other essentials that you're going to need to have and put together for your cash flow forecasts is knowing these data points. Once again, I think this is such a great exercise for business owners who are saying, okay, well, how do I put this stuff together? What are the important and key metrics of my business that I care about the most? And that's going to vary per type of business you have. For example, if you're a distributor or manufacturer versus you're in tech and you're maybe in software as a service, or maybe you're in agriculture and you're a farming entity. Whatever you have, some of these data points are going to be a little bit different from you. And so my advice is to identify your key performance indicators. And that's part of your dynamic reporting that you're going to be, that you should be running through as a good exercise. So knowing the answers to these questions here is going to be probably the best starting point in order to put that cash flow together, because all those data points are going to be able to put together a good and accurate forecast for you. I know this is a little text heavy here, but the cash flow forecast procedure, most of it is self-explanatory here. Make sure you're just using full dollars. You don't need to show cents. You don't need to go chase pennies here. And this is a little bit more specific, this procedure, to the last spreadsheet that I showed. It gets a little bit more gritty with how to put things in there. And then really do the best that you can and fill in some of these positions here where applicable, so that you can try to get some of your most accurate information. Okay, now cash flow forecast for startups. Still going to be very similar to a working business that's already aged and mature, but you just want to add a couple things. So if you have any investments, whether that's just like the new debt, if you have a new line of credit available for you, or you got a really great, did some fundraising and got a $5 million or $50,000 investment, make sure you add that in there, because that's going to equal your total available cash. Any share-based compensation, proceeds from the issuance of common stock, things like that. And now the goal of a cash flow forecast, well, gosh, why in the heck do we really do this stuff? Now, once again, it's about being able to look forward, because if you don't know what really the future is going to hold, how are you going to be able to make those operational decisions? You know, it'd be very similar to, hey, if you as just a person knew that on Friday you were going to get a flat tire, what would you do today to make sure that that flat tire on your car didn't happen? You'd probably change a couple things in your process and your procedure. You'd make an appointment with the dealership or whoever, maybe to get new tires, and shoot, maybe you see that flat tire, or you think of that flat tire and like, oh man, well, I guess I'm due for an oil change. Anyway, these are just really great ways to be able to look forward. And then the goal of your cash flow forecast is to mitigate any crisis that you might see in your business when it comes to that cash. So really utilize these projections and these forecasts to assist in setting some new goals and planning more for profit. So holy cow, whew, you guys have made it halfway. So we're back to that pesky pandemic. What in the world does COVID-19 or coronavirus have anything to do with cash flow forecasts? Okay, whew, my Red Bull's kicking in. I'm getting really excited, you guys. This is where I had a lot of fun. So we had some really good information come in from corporate here. So I kind of refined a little bit of my PowerPoint. But what's great, because we're talking about refining those cash flow forecasts. Now, I'm sure in January, if you were really on it, or you're part of a company that did a forecast, you were thinking things were really awesome. 2020 was starting off super hot. We were on the up and up for years and years. Things are going good. It's a feast. There is no famine. And you're projecting, oh yeah, this is totally rad. And then boom, COVID, right? Okay, we're probably gonna have to refine a little bit of your cash flow forecasting, because we have a new normal. I won't ask for all of you to come off mute, but I'm sure all of you have been financially impacted by what's happening here. Once again, we wanted to talk about the value of cash flow forecasting. Look to the future, really. If you don't have a forecast to see how you're going to survive, then if you fail to plan, then plan to fail, right? So here we are. Why do I care? Why do I care about a cash flow forecast? So for me and my personality, and maybe this is very congruent with some of you other folks out there that are high achievers, that want success and want your company to do well. So for me, I believe that knowledge is power and knowledge is comfort. So in a time when there's chaos and there's urgency and people are pulling their hair out and there's a lot of worry and there's a lot of fear, knowing and having the knowledge of all of your data points and having the knowledge of a good forecast and then having a plan should be a little bit more comforting to you, knowing that you have a plan. And that should be empowering to you, because that means you can take that plan and execute that. So out of crisis births opportunity. Don't ever forget that. I know some people are getting a little depressed with how the economic outlook is going, but always look for the silver lining here. So really how you're going to refine your cash flow forecast, because we're in such uncertainty, we're standing on not solid ground. We have to understand why we want to care about this, because the finance and accounting departments, I had said that they're kind of like the best supporting role, that they've won the Academy Award for the operations department. Your accounting and finance and the numbers and data points that you come up and you put together should be a great backbone for your operations, because knowing the data can help change you for the better when you go to apply that to actually how you operate your business, okay? So I put together some examples of why does this matter. So how they tie together your accounting and your operations department. Well, some of you have gotten the PPP, right? Or you're trying to figure out how you can continue to pay your employees. So if you have a cash flow forecast that says, I'm going to keep my 8 employees fully utilized on staff, but suddenly I see I'm forecasting a 20% drop every single month in our gross sales and in gross revenue. So that kind of questions, okay, do you want to keep on your full labor, whether you have the PPP or not? Rent and utilities, have you come to realize when you cash flowed out all of your rents, does it really make sense to work from home? Here's a good one, the third one that I really like, and why cash flow is really, really relevant, is your accounts receivable. So if your AR, if you are not collecting on your customers in a timely manner, that's really going to put the squeeze on your current cash reserves. So how can you be nimble and operationally change what you are doing in order to expedite all the money that is due to you from your customers? Do you retool your contracts? Do you add maybe an interest rate for those that are over 30 days? This is some time, use this time to think a little bit more on your feet and how you can make some shifts in your advantage. Payroll and vendor costs, what services can you outsource or maybe just use on a fractional basis? Maybe you don't need full-time employees. Can you get the same job done with part-time employees? Something like that. And then outstanding debt. Can you refinance to get a better rate? It's probably a little bit tough right now to do that since banks are inundated. But if you are thinking about refinancing, I would suggest doing that relatively quickly. And then cash flow forecasts also dial in all of these what if scenarios. Once you have a cash flow forecast and you're kind of looking out, either weekly, monthly, or quarterly, you can start doing some really cool stuff with your data. Oh, I get really nerdy about this, you guys. So what you can think is, okay, well, how do I model what might happen? So, what if I lose my biggest customer that accounts for 80% of our revenue? What if that happens? And we can, from that cash flow forecast, we can run modeling. So you can have a best case scenario where, COVID, no big deal. Shoot, sales are even up. I'm talking to you, to all my cannabis friends out there, when sales are going through the roof, right? Or you can do a worst case scenario, which is, holy cow, half of my labor gets really sick. And then I have, I lose 50% of my customer base, or I have to shut my doors because I'm a restaurant. You can create all these what if scenarios, and when you have those data points, you can plan out, okay, here is really bad scenario 1, here's decent scenario 2, and here's best case number 3. Ultimately, the number one question that we're trying to answer with a cash flow forecast and provide you that visibility is, how long will you survive if things start to tank? How long will your cash last? Sometimes that can be a really scary conversation, but it's a very honest and true conversation you're going to have with yourself and your team. So lastly, how in the world can you get some help on this? So how we can help, kind of our plug here is, if you are needing some more visibility into your accounting work, whether it's into some of the advisory help or the leadership or just trying to be strategic and intentful for these next couple months, we can be a really great resource for you. My team has everyone from bookkeepers up through CFO level staff. In times of non-pandemic, we always work on site with our clients. We work with clients as small as all of our great emerging startups on up through billion-dollar entities. Schnitzer Steel is a client of ours. We work in tech. I have a yoga studio as a client, manufacturing, everything like that. So a good reason to use us is we just operate by the hour. So if you're going down from full-time employees to part-time, we can be a great resource, as well as if you are still thinking of trying to apply for the EIDL or the PPP, remember that second round is going to come in and come through. That will happen. So let's make sure we're all ready for that. We can assist kind of like as an a la carte service to put all of that together for you, because that EIDL and the PPP, as simple as they might seem, they do require quite a bit of reporting, and for you to have a very good idea of how much money you're going to want and ask for. And then after that, we can take that cash flow forecast and say, okay, well, now that we have your PPP, if it's granted to you, now we can forecast out some good things that we can hopefully keep us going. So I'm just about wrapped up. This is me. I'm really happy to talk with you guys a little bit more in depth. I would highly recommend taking a look at these links here. So on our website, nowcfo.com, we are putting together a roadmap to recovery series. It is every Wednesday at 2 p.m. Pacific on a webinar via Zoom, very similar to this. It's going to be over different topics every single week, but it's really geared towards, okay, one topic at a time, how do we get through this, and what is the road to recovery when it comes to finances? So I know tomorrow our Portland office, myself and a couple others on my team are going to be presenting how to maximize your PPP or your EIDL loans, grants that you receive. So I think that's a very relevant topic right now. I also wanted to let you guys know, for everybody here that has joined us, I'm sure several of you have some very specific questions regarding your data or your situation or your company. And so what I am totally happy to offer is offline, happy to connect with you and offer all of you just a 1 hour consultation and planning session. So I'll have a controller, CFO from my team, and I will be on the call with you, and we can take a look, kind of roll through whatever data that you have and be able to give you some free pro bono advice. So if any of you would like to take me up on that offer, please just shoot me an email, jcrannell@nowcfo.com, and there we can answer some more of your very specific questions. But if any of you have a little bit more broad questions that you wanted to ask or concerns or anything like that, I'm ready to take a few questions. So I'll just leave it onto the screen for a little while.
Great, Jessica. It's Renee. Thank you so much. That was a fantastic presentation. You did an excellent job presenting a lot of complicated information in an easy to understand way. We do have a few questions, and I think what I'll do today is the person who asks the question, I will unmute them. I'll read the question out loud and then I'll unmute. I'm going to start with Doug. He asks, in Oregon, what is the minimum payroll needed to stay open? And he also asks, is there a rule of thumb for when old accounts receivable can be declared bad debt? And I'm going to unmute him in case he wants to add any more information there.
Okay.
Okay, Doug.
Doug, tell me again your first question. What was the minimum payroll? Can you be a little
right? So I know in California there were some minimum payroll you had to have in the bank. If you went below that, then you actually had to close your business. So I don't know if there's any type of rule like that in Oregon about having a certain amount of a minimum amount of cash to keep your doors open.
You know, to be quite honest, I've done quite a bit of reading and quite a bit of staying up on all the SBA and the PPP and EIDL. I haven't come across anything like that where it's mandated that you have to have a reserve. I'm not quite sure what California is up to, but I haven't asked I have not heard any feedback specifically for Oregon. Because the PPP is run through, can be run through your bank, that might be a good question for your banker if you have a relationship with somebody. But that's something that if you wanted to connect offline, I can do some research on that, and we can go over that.
Okay.
And then your second question was, when do you write off AR?
Yes.
Right. That is, there's no particular rule of thumb. I would say a lot of it kind of just depends on, is a case-by-case basis depending on when you want to, on your cash flow cycle. So for example, you know, we've had some clients that have gone out of business or whatever that is, and they still had outstanding invoices, and we had to write off quite a bit of that since we aren't able to collect on it. Generally, I would say, at the most, if you haven't collected in a year, then that's not going to be collectible. I would also strategize with your tax CPA, because you can use that as a deduction or expense. And so if you are coming up to, how do I want to say that? Especially before the end of the year. Let's say if they're supposed to, if you're trying to collect in June, or they incur the invoice in June, and they haven't collected within that calendar year, then I would say you'd be able to write that off. And then shoot, if they somehow turn around, decide to pay you, and you're able to collect on that, then you can just put that towards the line item of that debt.
Okay.
Great.
All right. Thanks.
Great. Thanks, Doug, for your questions. The next question is from Arvin, and he is asking, would you be willing to email the examples of cash flow forecasts in Excel to attendees?
Yeah, absolutely. I have a couple good ones. So if any of you liked the ones that you saw, remember I split them up a little bit, let me know so I can make sure I send you the right one. I'm going to send you my favorites. It's that 13-week that I really liked. That was all color coordinated. So yeah, just make sure that you submit to me. You have your email. So I think Renee, you have everybody's email. But yeah, I can shoot that out to everyone.
Hi, Jessica. This is Arvin. Thank you very much. I love the presentation, and yeah, the cash flow sheet Excels would be great. There's no example that's like right on for my personal needs, but I think taking a couple of those examples together, I could kind of amalgamate that to make what to create what I need. And then also, you know, you have, like you said, there's this nice glossary that you had presented on cash flow terms, some of which are hard to kind of pin down. So if you don't mind maybe emailing this slide deck, I mean, or just those slides on the definitions, that would be really helpful too.
Yeah, absolutely. Totally fine.
There will be a recording of this presentation, and I'll send everyone a link to the recording. And so that will include all the slide deck and the entire presentation.
Yep.
Okay, thank you very much.
Absolutely.
Great.
Yeah,
Thank you.
Ruben, I think to your point too, you know, I know some folks in true accountant form, some people on my team, for example, they use a cash flow forecast, and they even have a QuickBooks file for their own family and their own personal needs, which I think is a great way. So that just kind of goes to show that it's pretty translatable between whatever type of business that you're using, whether it's professionally or even personally. So you want to take care of your own personal budget. So yeah, these things can be added, can be edited to make sure it really reflects what's most applicable for you.
Oh, that's a good idea too, to use it for personal use. I didn't mean it literally, meant for my startup, but that's cool. Thank you.
Sure.
All right, and then the last question is from Holly. I'm going to unmute you, Holly. You're asking, how easy should it be to modify your cash flow forecast to those different scenarios like you would have, like you described? Like when I'm running different scenarios, I seem to have to go line by line and review every number each time, and it's very time consuming. And is there a better way?
Generally, it should be relatively easy if you are, trying to think about putting this in context of your question. If you are okay, simple one, super simple. You cut all of your employees' pay by 15% is the cost saving measure, regardless of PPP. So that can be reflected in that payroll expense line item. Now, unless you are doing quite a few changes all at once, if I was you, I would suggest just making one change at a time. Yeah, there is going to be, Holly, some verification in there just to make sure all the formulas are still spitting out what you want. It's not giving you all those hashtag signs. But if we're just changing one data point at a time, or even two, or maybe three at a time, is probably where I'd set the max. Because your cash flow forecast really should just be like a formula, and that's most of the time why we're doing it in Excel. That answer your question?
Yeah, I think for me, as I've run a startup and we're an R&D heavy startup, and so a lot of times I'm looking at, canceling or shifting out different projects to try to save money, and just it seems to have consumed like most of my time just rerunning different scenarios, and I just figure like either I didn't put enough formulas in to begin with, or there has to be just a better way. And what I've been told is like it's just really expensive software that you can't afford. So
I wouldn't say that. I don't, software is created by humans, and humans are the ones that are running this. So I would say that'd be a really good question and a good opportunity for us to use that 1 hour to kind of deep dive into it, and for you to just show us, hey, what is your process? Let's take a look, and then let's actually look at your spreadsheet and just check for some formulas, and then be able to give you a little bit more precise of an answer for that. Because yeah, I mean, if you feel like something is taking just really too long, then usually your gut feeling is right. Maybe we can find ways to make that a little bit more efficient.
Okay, thanks.
Yeah.
Great, thanks everybody. If anyone has any more questions, please put them in the chat. And while we wait for just a couple minutes in case there's any other questions, we're going to put up a post survey up on the screen. And we like to collect these whenever we have a lunch and learn, just for our own purposes here at the Oregon Bioscience Incubator. Jessica, this was really, really great. You did a great job, especially not having the feedback of being able to see all the participants, and just a really lot of good information, chock full of good information. And we will be sending out a link to the recording so that everyone has it and they can review it. They can go back and re-listen to parts of it and look at the slides that they need to. And then you can also send out those spreadsheets to the participants.
Yeah, absolutely. Yeah, so just make sure you grab my email, my contact information, even if you just have a very specific question that we can chat about offline, or you guys can take that 1 hour for myself and one of my teammates to take a look through things and just give you some free guidance and some free advice. We're happy to do that. Anytime you want to connect. So yes, I will shoot out those spreadsheets for you guys to take home. And so if you happen to not get one, just give me an email and I can email it to you personally too.
Great. And I just put into the chat your email address. If people didn't catch it on the slides, they can have it right here. And then if everybody could finish the survey, that would be fantastic. And any other questions, let us know. We're going to close the poll in about 15 seconds. Okay. All right. Thank you so much, everybody. This was fantastic. I appreciate your participation. Jessica, I appreciate you doing such a fabulous job. And Julia from the Portland State Business Accelerator, thank you so much for collaborating on this program. Thanks, everybody, for coming, and have a wonderful day. Bye.
Thanks, Renee. Bye.